the strength in Australia's economy is on the move, partly because the big surge of mining-related construction, that's now slowing down, and you're seeing some strength in areas like retail and housing construction. Now, those have been really weak in recent years, but they're sensitive to interest rates, and rates are low, and they're starting to pick up. And that also means a swing in growth from sort of, Western Australia and Queensland more towards the likes of New South Wales and Victoria. Now, yes, those changes have come with some costs. You're seeing unemployment at a 10-year high, but that's not exactly the end of the world. It's only just hit 6%. That's well below what you see in most of the nations we usually benchmark ourselves against. And what's happening, this transition from the construction bit of the mining boom had to happen at some stage. Asia's continuing to develop, and what it wants is starting to change, and Australia will be able to sell into that in the future. The sort of food that Asia wants, or the clean air means they'll want our gas, or they'll want to come here for tourism, or for education, or to learn more about how we do wealth management. Australia's opportunities still lie in Asia, and we'll be able to sell into that, but that picture will be changing. For the motor vehicle sector itself, the big picture story is very much one around exchange rates. The Australian dollar has been quite strong over the last decade in general, and the last handful of years in particular. And when you get great strength in the Australian dollar, that's great for car buyers, and it's rotten for car manufacturers. And that finally had an impact. You saw Ford with the initial announcement, they're going in 2016, then Holden said they'd go in 2017, and now Toyota also says they're going in 2017. In a grand sense, it's no surprise. We saw Mitsubishi go back in 2008, but the market has been moving against Australian manufacturers. In fact, the actual production's been moving to low-cost locations around the world, and we're not a low-cost manufacturer. But it's not the only thing going on. We make big cars, and so smaller family sizes, rising petrol prices, also having an impact on the sorts of things, types of cars that people want to buy are changing. And the dollar itself, and falling tariffs, falling taxes on cars have made a big difference. You look at the number of weeks of average earnings to buy a car like a four-door BMW 318i. In less than 2 decades, that's halved, right? The number of weeks to buy BMW 318i, number of weeks of average earnings has halved to do that. The Australian dollar's changed that affordability, changed the equation, and you started to see, the local car makers make losses, the cost to governments and hence taxpayers were going up, and as soon as one said they were going to go, then the critical mass gets lost, not just for the manufacturers, but also potentially for many others in the manufacturing side of the sector. Now, it is not the end of the world. Do not believe those people who say, 200,000 jobs lost and recessions in Victoria and South Australia. That isn't going to happen. The announced job losses to date, and remember they're 2016, 2017, they total about 7,000 jobs. And my guess is that the worst case you could have would be 70,000 jobs lost. Now, that's pretty ugly, but it genuinely isn't the end of the world. What it is a major shockwave to a car sector. So individual operators in the car sector in Australia will have ties to different things. For some people, this will be really important. For others, not so important. For some, it'll even open opportunities. One of the opportunities that people have mentioned is the potential that taxes will come down. Why would you have a luxury car tax, if there's no longer going to be a local car making operation to protect? Or indeed, why have still the remaining tariff there is on cars? And that's true. Having said that, you've got to remember Canberra has a deficit. It's desperate for money. There may be no sense behind those taxes, but that doesn't mean that Canberra's going to be handing that money back anytime soon. And don't forget, tax is not a one-way story here. You think of the pretty generous fringe benefits tax treatment of cars. That may not stand the test of time. The argument that helps local car manufacturing, that too will fall by the wayside. What's going to happen to sales? Well, again, the Australian dollar being very high for a long time was great for, made cars very affordable, the best affordability we've seen, in almost half a century. A remarkable set of developments. But the dollar is so important that it was only a couple of months after the dollar peaked last year, middle of 2013, you saw car sales in Australia peak. And they haven't fallen much. They're still very close to record highs. But by and large, the dollar is no longer going to be the driver of extra sales the way it was before. It's already come down, and you have to take with a grain of salt anybody's forecast for the dollar, but chances are it could head down further over time. Which is why the other big driver of sales is where the good news remains for this sector. Low interest rates. Very low interest rates, and they will stay low. Yes, unemployment at a 10-year high is not anywhere like you're seeing in the rest of the world, but it is enough to keep the Reserve Bank on the sidelines. And that combination, the dollar drifting down a little, but interest rates staying low, should mean we can consolidate the increases in sales that you've seen in recent years. You may not be able to see quite the same level of increase, but it should be a solid outlook.